All right, everybody, what is up, and welcome back to another financial trivia. We're on to week 9, and honestly, I love doing these every single week with myself and Ryan here as the co-host here. We drop 20 questions, 20 seconds for each question here on the Discord in the Kingdom, and the winner does get a free month. So if you are taking part in this, you have a chance to get a free month to the Discord. Ryan, how are you doing on this fine evening in my time?
Doing good, doing well, and went on a nice hike. Quite tired from it, but happy to be here. I too also enjoy this every week, so happy to do it.
Nice, man. Love to hear that. So, again, everybody that's in the Discord right now, these are all the people that are participating in today's. And again, every single week we give out a free month in Discord. And if you already get a free month, or you already have access, we can give away other things in terms of like memberships, or not memberships, mentorships, I should say. And everybody keeps wanting me to do your homework, so I guess we can talk about that as well at some point. If you want me to do some math homework for you, I guess we can make that happen too, Ryan. Right?
Yeah, hey, there you go. I mean, I don't know what grade people are in still, but whatever they want.
Right. Oh man, and Strat Cat, welcome on in. We are up to 6 people. That's great, and maybe even 7 because people get kicked out and back in if you join into the app and then you leave the app. Then who knows what happens here? But again,
Yes.
we have a lot of questions here that are on the cards tonight here. And I think there's some pretty tough ones in here. So you might think they're easy, but it might be a little more challenging than you think. So without further ado, Ryan, are you ready to get going?
Oh, I am so ready.
All right. And everybody in Discord, I'm sure, is ready as well. Let's get us
Yeah,
started with financial trivia week 9.
9.
Crazy we're doing this long. Whew. All right. Coming in with
Nuevo.
first question. Question number 1. A stop loss converts to a what? So this is one of my questions I came up with. What does it mean when you have a stop loss? What does it convert to? If you set a stop loss in your brokerage account, it will convert to a what? Limit order, IOC, market order, or good till canceled, cancel. I don't know why I put that twice, but I should just put GTC, right, Ryan?
Good to cancel, cancel.
Good till cancel, cancel, baby. Yes, sir. And the correct answer is a market order. And again, what basically really happens, it doesn't become a limit order. What really happens in this case, when you set your stop loss, basically, if the stock goes to that strike price or lower that you set it at, it'll convert to a market order to then get filled automatically or to the best it can at that price. So that's usually
Right.
what the market order really does. So the stop loss is there to kind of help, stop any kind of losses that you have in your positions. Ryan, do you have anything else you want to add to really
Oh,
that one
I
as
I
much?
was reading Tyler's. I was gonna say I think that there's stop market and stop limit, and so but Tyler is right. There are two different types of stop losses. So, but I think you were going
Uh,
for stop market here. So,
y- yeah.
depends on your broker. Like, I don't think Robinhood lets you do either. It depends on your broker.
Yeah, and I guess it's kind of the one thing where it's like this is a good question to think about, but also again, like there's only 4 options, and I mean there's a lot more options you really can do. But for me, I read it at face values, and like when you do a stop loss, like if it hits that, it automatically will go to a market order, I believe. So that's what my thought process usually was on that one.
I think you're right.
But
Yeah, I think yeah. If you set a stop loss order, it's not gonna go to a limit order. It's gonna go to a market. I think unless you pick a stop limit order.
right. So, I
Um,
mean, definitely a tough thing to kind of really think about. But again, this is one of those questions where you got to look into your broker and see what it offers. I know, like, I like what Webull does. I don't know if you've seen it, Ryan, but what Webull does is you can do a stop loss and take profit at the same time. So
Nice.
you're able to set up both. So that way you can place your order, you get into your position, and you set both at the same time simultaneously. And it allows you to say, hey, if it hits this, great. If it hits this, great. And then it just cancels out the other one, or it cancels the other order that you have on the other side, essentially. It's really nice, actually, for me.
That is nice. Yeah, and in Tasty they have a bracket order, same sort of thing. If you want to do a bracket order, you can set a stop and a take profit at the same time. But I have
Yeah.
never used Webull, so I wouldn't know.
I will tell you, I actually do like Weeble's interface in terms of like your like how it looks. Like you can see where like they actually like if you when you buy into a position, whether it's options or a stock, you can usually see on the chart they'll put like an actual like alert about like hey like this is where you entered in at, and you can kind of see it kind of go from there. I don't think Robinhood they just say here's your average price, but
Yeah,
you don't actually see it on the chart, which I feel like is actually kind of nice to see like oh. Am I down a lot? Is it going where I want it to go? So I actually do like Weeble for that reason sometimes too.
Yeah, no, I think a lot of people like it more than Robinhood for some of their things. I think maybe in Robinhood Legend they put the um price on there, but that might be new. And once again, Robinhood Legend not the best, anyways.
Yeah, I mean, I'm not a big fan of it, but at least like on the Weeble mobile app, you can literally see it. You don't need a desktop to do it, which is nice, you
That
know.
is
So
nice
that's why I
on the
kind of
mobile
liked
app.
it.
That's
Yeah. Yeah, for sure. And again, some of these questions, again, as Ryan and I make these questions, some of us can read these and interpret these in different ways, and we understand that completely. So, don't feel like, you're looking into it in the wrong way. I was going off of how I always think about stop losses that convert to market orders, but like, Ryan said, and like Tyler said in the chat, there's stop limits and there's, stop losses. There's different ways, kind of what your brokerage is. So, we're all human here. We all interpret things in different way. But thankfully, there's 19 more questions to go.
yes. Yes. So Blazing, don't worry about it. Don't worry about being scammed. There's only one of 20.
Yeah, and hopefully we're not gonna get scammed here. So this is another question. Which is one disadvantage of trading futures in a prop firm? Keyword here is disadvantages.
Yes, disadvantage. I meant to bold that one. I forgot. But yes, a disadvantage of trading futures in a prop firm.
Someone said they want your car, dude, in the back if they win.
Well, you can't have the Lambo. Sorry, man. Sorry,
All right,
Brock.
Ryan, take it away.
Yeah, yeah. So the right answer here is the disadvantage is you miss out on preferential tax treatment. So when you trade futures, no matter how long you hold it or whatever, it's always 60% long term, 40% short term. But if you trade in a prop firm, they give you a 1099, so it's just all ordinary income. So you miss out on that bonus. It's just considered short term income that lumps into your tax bracket of regular. So it's not, you miss out on that. But your max loss is your upfront costs because basically in a prop firm, you're going to pay for that. I forget the names, but you're going to pay up the upfront like eval fee, and then you might have like an activation fee after that. But basically, your upfront cost is your max loss, right? Um, and then you have the ability to use firm capital for larger positions, and then also you have access to professional trading platforms. So basically, if you have smaller account, you could trade with a bigger account technically using a prop firm. Of course, you have to worry about their max drawdown. They say you have a $50,000 account, but you really have a $2,000 account. So yes, for that is one disadvantage of it. So the disadvantage of trading futures in a prop firm is that you miss out on that preferential tax treatment. So you would rather have the 60/40 taxes if you trade futures on your own, but you miss out on that. So that's what to your point. That's why it's the disadvantage.
Love to hear that, man. And I do not know anything about futures, so that's why you got all the wording on that one. I don't have anything to add to it, unfortunately.
It's okay. I a lot of people use prop firms a lot more than me. I've done it twice. I didn't do very well, but I don't trade futures that way anymore. So
Right. So right now we're looking at. I'm not going to read these names out because Galaxy number one I can read out, but I mean this one I'm not reading out loud because we're some immature people here, which is totally funny actually. This one's funny too. I love some of these names here, but we got plenty more questions to go. It's all about knowledge and bringing the education here, and we try to bring all these different topics and questions. On to question 3, what is the name of this candlestick pattern? And
um,
to be honest, I didn't know the answer to this one either.
well, I wouldn't if I didn't look it up. And
Is it from the Kingdom University?
it is.
So you guys gotta be watching the Kingdom University. Go ahead, Ryan. I mean, obviously, I don't know how much you could add to it, but
Okay, guys, I'm just saying, let's show the media. Yeah, so to me, a doji, from what I got in the information, a doji would have no body on the candle. That is all
yes,
I know.
correct.
If you Google spinning top candlestick pattern, this is what is going to show up. I will tell you the guys that right now. So I know I saw that 5 of you got it wrong though. So, but honestly, I don't know candlestick patterns. I'm just hey, spoiler alert for everyone who's going to play in the future. I literally go into the Kingdom University. I go to the candlestick pattern channel and I pick a candlestick pattern. I'm going to do this every week for a while because it's an easy question to add. So just keep that in mind. But I'm literally just going in there, picking one, taking a screenshot, coming out.
Oh, look at
So
that. Rocky put in the chat there for us. Look at that.
I'm just saying that's all I'm doing. I don't know candlestick patterns, but yeah,
One thing to note though, right, is that with the doji candle, from my knowledge of doji candles and looking at those kind of things on like the internet and stuff like that, dojis are the ones that have no bodies, but it's one candle that shows a possible reversal. This is two candles, right? So the doji candle has no body, and it could show a possible sign of a reversal to the opposite way afterwards. I've never seen someone call out a doji, which is two candles like this back to back. But unless is this just saying that it could be a bullish or bearish one, or is this like do you
yeah.
look for these two candles together, Ryan?
From what I understood, which is what Itai said, is that it's a bullish bearish example of that. Not necessarily they're going to be in a row, but
Oh.
I'm not positive.
I wasn't sure if it was like two candles back to back you're looking for, or if it was just like one bullish. Okay, I got you then. Never mind.
I I
Never
think
mind.
I think it. I mean, it is kind of confusing because if you look at the image, Doji just shows one, and spinning top does show two. So I don't. I'm honestly, I'm not positive.
Well, I guess someone can be. We should be on the lookout for these patterns at some point. And
Yeah, hey,
see.
just go look at that. Honestly, you could pull it up and just have it open while we're playing, and you'll get one question right.
Yeah, right. Is
Yes.
that the only candlestick one for the week?
That is, I only do one a week because they're easy to do, and then I have to create 8 more. It's hard to run out of you run out of content. We're on week 9 here.
Yeah,
So I like to have
might
some
start.
where I,
Might
I
start.
pick a subject and I just,
Mm,
do a few every week.
We might start circling back through so you can watch the previous YouTube videos about these. It might help you study a little bit, maybe. Or
Yes.
something.
Thought you would
Trying to
do
get that
this.
watch time, man.
Yes.
Question number 4. Which option strategy is a short call with a defined risk? Keywords short call with a defined risk. They know what it means to be defined risk. And again, there's still a lot of questions. We're on question 4, guys. We got plenty of questions to go here. And when the timer is up, this is Ryan's question to explain.
Got a lot of me in a row here.
Yeah, all right. Go ahead, Ryan.
Yes. So it is a call credit spread because with a call credit spread, you're selling a short call and then defining your risk by buying a further out of the money wing. So basically your max loss is defined, it reduces your credit received, but at least if you get blown through, you know how much you can max lose. Of course, there's assignment risk and all of that, which you can still get a max assignment or max loss if you play with it, but it's not a broken wing butterfly. Broken wing butterfly, you can think of broken wing butterfly a couple of ways, but in my opinion, it's really a put ratio spread with defined risk or a call ratio spread with defined risk. And then an iron condor is a strangle with defined risk, and an iron butterfly is a straddle with defined risk. Um, so,
So, I mean, I was gonna say, so with a call credit spread though, right? So I don't know how your brokerage does it, but I know Robinhood isn't really that good at this, right? If you get the early assignment on the short leg, Robinhood won't automatically close the long one to kind of cancel it out. You have to kind of manually do it. I don't know about your brokerage. Does your brokerage do that?
yeah, so you kind of have to do it on your own. Um, so you like I actually just got assigned. It's a broken wing butterfly, but I got assigned on a broken wing butterfly for earnings that I let sit. And
Yeah,
what happened is my shorts got assigned, but then I had short puts and then long puts. So then I just sold the shares and closed the puts at the same time. Um,
gotcha.
but yeah, I know that that happens with Robinhood. That happens with other brokers. But of course, if you waited till expiration, then they would, do the whole thing for you, right? Assuming you weren't
Yeah.
assigned early.
Yeah, because man, did that happen to me once, and it was like you're short $13,000. I was like, whoa, 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 I have a call option here. Let me exercise this part and use that as like so
Right.
like it's like oh, like you don't have the shares. So if you're not experienced in doing those call credit spreads or those put credit spreads, like you may look at your account and be like margin calls coming in, and it might be freaking out. And it's more of just a matter of just closing out the other one, and then that way you don't get the margin. You still hit the loss of that defined risk, but it just is an extra step on your part usually. So, but people freak out when they see like negative $14,000 in my account, and they're like, "What the heck?" So you got to
Yes.
be very, very careful. Well, I
Yes.
know one thing people say is that if your stock is getting close to that short leg, just close it out, manage it carefully, so that way you don't have to even risk that like confusion. But I don't know how some
Yes.
people do it differently.
No, I mean, and so for me, what happened this week was Netflix, and I really should have just closed it out for the loss early on, but I decided to wait and see if it was going to bounce back because all of the dips have been bought lately. So I got assigned 200 shares of
Oh, okay.
Netflix. It was luckily my account can handle it, but it was quite the negative margin balance I had for a day that I then closed out. So I don't think I accrued any interest. But yeah, if you're getting assigned 200 shares of Netflix at
Yeah.
1160, it's a big hit for the day. But it worked out fine.
Yeah. You know what sucks though is that like you can get exercise like after hours for the market, but then you can't close the other leg to offset it until market opens. So you're sitting there like stressed out, like, dude, I have negative $14,000 and it's just sitting there, and you're like, I can't do anything about it. So then like, you have to wait till market open to then close it out. Like it can become very stressful if you don't know what you're doing.
No, yeah, if you're not prepared for that as a reality, then it is hard. Like I even think Cube Master, I think he stops trading spreads, but he did like a broken wing butterfly for earnings, and he got assigned shares, and his account's extremely small, and he got a margin call. But they all they did was exactly what I did, which is sold the shares and sold the puts, and it was done.
Yeah.
Um,
Yeah,
so
definitely stressful times. So obviously, again, as we always say, read up on your own, do your own research. But these are things that we're talking about that are possibilities that you could have here. So keep that in mind as you are, trading spreads. I've been doing a little more of debit spreads than credit spreads because if it goes past my strike on my short leg for my debit one, I'll be more likely to close it for a profit because I'm paying up front instead of getting the credit for it. So that's been pretty okay and a little bit more manageable for me because I'm like, oh, okay, cool. Like, the long leg is the short is when you're selling. So, the risk of assignment is if it blows past the one that you bought, which is actually great for us because you're in that profit, area. So I actually kind of like it that way.
yeah, I mean, I definitely would. I don't. It depends on what you want to do. I'd say definitely around earnings, it's good to do like a debit spread because either you're right or you're
Yeah.
wrong. It's a small amount of money usually,
Yeah, definitely. Moving on to question number 5, which is a defensive stock sector. This one I was like, oh, okay, this might be an interesting one to see if people know it or not. Energy,
Yes.
utilities, tech, and materials.
Yes.
Who is this margin fellow that keeps calling me? I don't know, man. Just if you, hey, you don't get margin called if you don't pick up the phone. Keep that in mind.
Yes.
The correct answer here is obviously utilities. Utilities is your defensive sector stock. Um, I don't really honestly have much more knowledge in that than just saying like, hey, like just know your sectors and know which stocks might be that one. I don't know if you have anything you want to add to that one, really, Ryan,
Well,
much, but
when you say defensive sector, do you just mean like from a stock portfolio aspect in that like if other things are down, utilities is probably a safe bet? Like what do you mean by defensive stock?
yeah, I think it's more of what I was going for was that, yeah, was kind of that idea.
Yeah, I mean, it makes sense to me because utilities they're recession proof. I mean, everyone's going to need to have electricity and gas and da 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 da, right? So that
Yeah.
this makes sense to me.
Yeah, I mean, obviously, tech is like just the one that's just not a
What are you
defensive
talking
one.
about?
Like if you're on the attack, tech is one of the ones that you are in on the
Yeah,
attack, not the defense.
no, yeah, tech is a risk free instrument, man. What are you talking about?
Yeah, usually the like a Ty said, usually it's the ones that do necessities or consumer staples. Those are like mostly your dividend stocks that you're usually looking at. Those dividend paying safe haven ones, the ones that usually a lot of people go to in a defensive market because you get still getting that passive income and you're still, the stocks don't move as much usually. So that's the way I usually look at it.
True, true. Hey, Blazing, you're on the
And it is
board. You were
still
saying you're
anybody's
on the board.
game.
You're on
Don't
the board.
forget.
Go ahead. Sorry, what were you saying?
Yeah, heck yeah. I was saying it's still anybody's game, no matter what people might think. We still have 15 more questions to go, so do not shy away
Yes.
from anything.
Early.
Question number 6. Circuit breaker results in. This is actually, I think we mentioned circuit breaker. I think it was last week we talked about what circuit breaker is, I believe.
I don't recall. Um, and I had no
I think
idea
there's a
what
question about.
this was.
I'll wait till the timer's up.
Yeah,
I'll wait till the timer's
wait
up.
those more seconds here.
Yeah. I don't want to know what's going on with that one. And yes, it does lead to an automatic hold. It's a huge thing that does happen. In I think it happened in the market collapse back in the housing market in '08, I believe. It's usually when you have like those black swan events or Black Monday people call it. Basically, what happens if the overall major indices are falling like a rock, they have a circuit breaker built in where they will halt trading. In that, it could be for a couple minutes, it could be for however long it could possibly be. It all depends. But I believe we talked about this, I think,
We did.
last week. Ryan,
We
was
did.
because um, the we talked about bear market, I think, last week, like what's a bear market versus a correction and all that kind of stuff like that, and how you can trigger circuit breakers and all that kind of stuff. So it's a very interesting thing to think about. Fed action just will never happen because Jerome Powell will not step in and be like, "Up, stop the market." Like, he has no control of the stock market. That's not what the Fed would do. Short ban would you can't ban the market. The market has to be open, so it just kind of halts it. And spread widening definitely is not the case as well. Let's talk about like your bid ask spread and stuff like that. That's definitely not what's going to be happening there. It just halts their stocks. It's kind of like when you see those penny stocks that start getting short squeezed. There's too much volatility. They halt trading. With the indices, that's the same thing, but it's like a huge drop where it's like even the Liberation Day back in April did not trigger the circuit breaker, believe it or not.
Well, I mean, it was a couple day drop. It wasn't just the one, but yes, I hear what you're saying.
Yeah, but I believe there was one day where it was like 3%
Oh
down
yeah.
at least.
No,
So
there
that's
was
something,
one
I
really
mean,
rough day. It's
so it's
just
not like
you.
that bad.
Yeah, yeah. No, but this this makes it so that we don't have a crazy, like you said, Black Monday event. We're still gonna have a Black Swan event, but you're not gonna have like a Black Monday where it's just a frantic selling. Um,
Yeah. Rock says, has it ever been halted? I believe 2008. I want to say financial housing crisis, maybe. I don't know. I can look it up right now,
I
though.
honestly don't know. I don't know when
That
they
was that.
put this in.
Yeah. Let me look. I'll look it up for us really quick.
It's for people to stop
Breaker.
freaking out. I'm gonna guess Black Monday did not have it because I know that they talked about there was something I watched about how like it was some article. It was all about sizing, basically. Like it was some article like, oh, the Dow Jones dropped 50 points or something, and it was like a
Oh,
huge crash back in the day. And now it's like, well, that's like a day. Anyways, what were you gonna say?
so it happened a lot during COVID, actually,
Okay,
during the
makes
COVID days.
sense. People freaked out.
March 9th, yep. SPY dropped, or S&P 500 dropped 7% shortly after market open, triggering a 15-minute trading halt. A second 7% decline happened a couple days after, maybe it was after the weekend, having another 15-minute halt. On the 16th of March, it had a third one that happened. And on the 18th, it had a fourth one that really happened. And then
Mm.
after that, it was, I don't know if there was anything after that
When did they put it in
for
place?
COVID.
Does it say?
No, it doesn't say when they put it in place. Let me see if I can find anything about it because it's always knowledgeable.
Just
There was
curious.
one that happened in 1997. Believe it or not,
Okay. Okay.
it was implemented after 1987.
1987. And Black Monday was like,
There-
so that was before Black Monday, I think then. Okay. So that makes sense.
yeah, these curves were put in place in 1988 as a response to Black Monday's chaos.
Makes sense. Because Black Monday
It happened
was
like right
really
after.
was a pretty bad one. To Tyler's question, which they don't do it for up, they only do it for down moves.
I believe so. I don't think anybody's going to be like halt the market. We're up five
Yeah.
percent. I don't think anybody would
I
halt that
mean,
in the economy.
we have that happen with individual tickers, like Beyond Meat that happened. I mean, like, are they because they're moving up too fast, or is it that there's a chance that people are starting to sell and they want to stop it from tanking? Um,
Yeah, I think it's because I remember Tyler said that SPY was up 8% in like a day. I remember those that was like the most historical day I've ever seen where it was up like 8% in that one day. But
yes,
yeah, with individual stocks it's different because, it's a lot of volatility and I think they have it where it's put in place for um individual stocks up or down because they're trying to limit people gambling and getting into a stock they have no idea about. So they halt it. So maybe people like will second guess themselves maybe on that one. I'm not really quite sure, but it's more of just it's not a circuit breaker. It's just a volatility halt that you get, whether it's up or
gotcha,
down, I believe.
gotcha.
So
Yeah,
yeah, it's really interesting stuff there. So you guys learned something new today. Look at that. How cool is
didn't
that? That's what we bring here in the kingdom every single weekend.
yes, Strat Cat rolling. Oh, he left. Never mind. Strat Cat rolling here.
Moving on to question number 7. A stock's beta of zero point 0.8 means what? Less volatile than the market, more volatile than the market, same volatility, or there's no correlation whatsoever. We did talk about beta, I believe. I wouldn't think it was last week. I think it was a couple weeks ago, Ryan.
We brought up beta. Yeah, I don't remember what we were talking about or when it was, but it happened for sure.
Yeah, and so beta basically is, if you have a beta of zero point 0.8, that means it's going to move. It has less movement compared to the overall stock market. If it has less movement overall, that means it's going to be less volatile. You'll see a lot of your dividend paying companies that are betas of zero point 0.6, zero point 0.7, because you're not getting as much movement. Whereas you look at tech stocks, you're going to get like 1.5, 1.8 betas, which is a huge difference, right? So a lower beta means it's less volatile, which makes it better for us overall. So, you'll see a lot of people moving into beta stocks that are lower if there's a lot more fear. So like Procter and Gamble, Johnson and Johnson, those ones don't have as much stock price movement. They're more safe haven plays in times of uncertainty. So that's my knowledge on that one for the people.
Yes. And no, it was a
Oh,
good
it's
one.
getting close. See, people are coming up here. It's getting a little close here. Love to see
Yes.
that. We're rolling. Question
Yes.
number 8. Inflation most directly erodes. Now, you should hopefully know what inflation does. Hopefully.
Uh, you know, you didn't want to type dividend in there. You wanted to just do div growth.
Yeah, I got lazy. I get lazy a lot.
Those couple extra keys. Ugh.
Nah, I mean the only time you get this wrong is if I put the wrong answer. But yeah, so your inflation focuses on your purchasing power, as inflation is right now it's at about 3% from the CPI data we had that came out on Friday. It's about 3%, which means that it costs 3% more than the year before. Is how your inflation is coming into like how you read it, which basically means that if things are costing more, that means that your dollar doesn't go as far as it used to. So something that was a dollar, for example, now costs $1.03. One of those things kind of keep in mind about as inflation is that it's going to decline your purchasing power. That's which is why you need more. That's why people say that housing is a good investment to get into long term because it combats inflation. Because if your dollar goes down in value, that means your house will have to cost more dollars, which means it's going to go up in value and stuff like that. So that's why people love to talk into that aspect of things. Believe it or not, my students are paying for their AP exam they take in May, and a couple years ago it was $100. Now it is $101. So 1%
Whoa.
fee pushed in there. So it's that
Wow.
inflation coming in. Looks like.
That is that's kind of funny. I had to do a
Yeah, they're
dollar.
like they're like, Mister, why is it 101? I'm like, dude, I don't know, inflation probably. That's something I can come up with. So they're just trying to do that. Like they're
Yeah.
just charging a 1% fee for doing it. I don't know, really.
That one's kind of
Um,
silly.
yeah. But inflation definitely is very, very, a thing that you should very much be knowledgeable in. If you win, Fish takes your AP test. Yeah, if you want to fail, the only AP test I could take that you do well with would be AP statistics. That's so if you want, hey, I'm more than happy to do it for you. But
Yeah. And don't have me
AP
take it because
literature, I'm
I
failing.
failed both of my AP tests. Go ahead. What?
I was to say AP literature. Yeah, you're cooked on that one. You're getting like a 1. So I'll let you
Yes.
know right now.
I did. Yeah, I did AP English and history, and I got 1 on both of them. I was in AP Bio, but I dropped it. But yeah, so it didn't do well.
Yeah. And the nice thing is, like Red Bull says, is that if you do pass the AP exams, even if you don't get the exact credit for the college course. You get elective credit, which everybody still needs anyways in college. So you're still getting some of those elective credits, which is actually still cheaper than paying for the college credit while you're in college. So, they pay $101 for the AP exam, which is cheaper than paying, 1,000 or so for a college class that's an elective anyways. So, um,
Yeah.
just kind of depends, but I mean, it still has a little bit of value to it. Still, if they had no value, they would probably get rid of it entirely. But some people just, it shows off how intelligent they are. I guess I don't know.
Yeah, I had over a 4.0 and did terrible in my AP classes. So what does that tell you?
Yeah, they're definitely some of them are definitely really, really tough for sure. So moving on to question number 9, which option strategy or what option strategy is shown in this profit graph?
Which
And
one
as you
is
can
it,
tell by the
guys?
brokerage, it's Ryan's.
Which one is it? Definitely one of you should know this one for sure. And if you don't, that would be funny. But most of you should know this one, I would imagine. But I don't know.
Oh,
Okay.
dude, you go ahead. Take it away.
Now, maybe yeah, Iron Condor. You're right. You're right, Mr. Tyler. It is a short put. Now, the reason it's a short put, everyone, is it does say put there in the middle, and there is sell P there. Um, I do understand that it might be hard to see, maybe, but it is a short put. Now, it kind of looks like a covered call profit graph, which it makes sense because it's similarly your upside's capped, all that stuff. Yep. See, Blazing, this is why we don't use AI. You went with long call, and this is definitely not a long call. You want to know why it's not a long call? Because the number one, there's sell there on the bottom. But then also, if it was a long call, your profit would be unlimited upside.
True that.
Um, yes,
Yeah, and also again, when you have the negative one, no matter where you see it, either your call side or put side, if you see a negative one, that means you're selling an option, not buying an option. So you're always gonna be short on the leg that you're looking at, essentially.
yes. This one I was hoping would be pretty easy, but I guess not.
Yeah. Dude said uppies. Yeah, so
Yes,
you got him in uppies. Yep, that's all I gotta say. It's like Mirage
it's
is in here, man.
it's yeah, it's all right, Strat Cat. It's okay if you didn't, you weren't the only one to get it wrong.
Yeah, man, it happens. All right, question number 10. Doubling which of the following can give you a rough estimate of the probability of touch of a given strike? Dude, I don't know what you're asking here. You could probably explain it better than I can.
Yeah, so probability to touch is the likelihood that your strike is touched during the expiration cycle, right? So if you pick a $70 put and it has a probability of touch that's 50, that means that there's a 50% chance that it's going to touch within the expiration cycle.
Oh, dude,
Um,
everybody got it right. Go
yeah,
ahead.
very good, everyone. I did not know this until a little while ago. I thought this was going to be a little trickier question. Now maybe it's because of what I included as the options that made it obvious. But yes, if you double the delta, it is a rough estimation of what the probability of touch is. It's not exactly correct, but it's a quick and easy way. So if you're selling a 25 delta put, you have a 50% chance that that strike is going to be touched during the expiration cycle. That doesn't mean that it goes fully in the money for a long time. It could just mean that it hits your strike and goes back up. But yes, it is delta. Good job.
Amazing. Yeah, love that. Everybody's moving up in the chains here. We love to see that.
Yes.
So we have a close race. And again, still we're only halfway through it now. So going on to question number 11, we'll get right into it. A lagging economic indicator is lagging economic indicator. See who knows. I don't know if you know it or not.
Well, I only know it because I looked it up. But if I didn't look at the answer, I wouldn't have known. To be honest with you.
Yeah. So big honestly, the long story short for this one is yeah, because this is a tough question. Your CPI is a lagging economic indicator. And the reason why it's a lagging economic indicator is because it comes out showing inflation where it is and when it's not from the previous month. CPI comes out. So the CPI we had that came out on Friday
Yeah, yesterday.
was for September, not October. So that's what makes it a lagging indicator because it's an entire month behind. The yield curve is changing every single like day. Like your yields are changing; those are fluctuating all the time. So that's not a lagging indicator. It's CPI data that comes out once a month, but it comes out once a month for the previous month or the prior month compared to it. Yes, as in the lagging, as in the data is lagging behind the current, data that we're looking at. Exactly. That's what lagging indicators usually focus on, is that they come out they come out after the month has already gone by. So we're looking into the past for a lot of things. One of the big things that we that's a huge lagging thing also is unemployment, which is why we have a lot of revisions in the labor market. The revisions in the labor market is because that lags behind a lot, so they always have to revise it to get more up to date knowledge about the unemployment and stuff like that. So yeah, Ryan, I don't know if everything else you want to add to that or not, but
Etai, I don't have anything to add. Just Etai really wants it to be the yield curve also. So just know that.
yeah, your yield curve is changing daily. It changes daily, so it's not lagging behind. Like if the yields are going down, like you know what's happening in the current market standpoint. If yields are going up, you know what's happening in the current market standpoint. But CPI data that comes out, if it says inflation is 3%, that's from September, not October. So we don't even know what happened in this month, and we're not going to know what happened this month until the next month, in theory.
Makes sense.
So that's why there's a lag behind it because you're not seeing what's happening currently in our economy. You're only learning about what happened in the previous month in the past, if that makes sense. A tie for you.
Yes, yes. And also, Fridge, what are housing starts? Just want to know what that is.
I think it's just your housing inventories and like you
Oh,
kind of put your data in there and saying like it's your housing market and how many houses are being created and stuff like that. So
I thought it was a typo. I thought it was housing stats and you put starts, that's all.
no,
No,
no, but
real
the
thing.
thing is also is that that's not really an economic indicator. I mean, it's good for
Gotcha.
real estate, but it's not your economy overall.
Right.
Your economy overall is like your inflation, your unemployment, like all those kind of things are those lagging economic indicators.
Makes sense.
Which is again why we have that's why we have those revisions for labor market because it's comes up like not everybody has their data in and they revise it when they have a better picture of it. So they revise it over the last months or whatever the case is. So it's always changing. So labor unemployment is again it's based off of last month. Like we don't know what happened this month also. So crazy stuff.
Yes, yes.
Hey, Galaxy number one got it right. He was the only one.
He knew.
Question number 12. Which industry does not, or which industries do not use futures to hedge? This is a
I
Ryan
guess
question. Back to futures, Ryan.
I guess I worded that wrong. It should be which industry does not use futures to hedge, but it's okay.
That's all right, man.
I'm not. This is financial trivia, not English trivia. Yes, technology companies are correct. So yes, so oil and gas producers, they're going to buy oil and gas futures or sell to hedge against their position. Probably probably going to sell them so that if they drop, they benefit from that and they'll lose out on the prices. Agricultural producers, same thing. If corn goes down, they have a hedge with the future. Manufacturers, now, of course, I should have maybe, but if a manufacturer uses parts, like say, let's say copper or other raw materials, they're going to hedge with those with like copper futures or silver, gold, or whatever they use to manufacture the products. But technology companies don't really use any futures to hedge. So that's why it's the wrong answer. Well, the right answer,
There
but
you go.
well, they don't. The one industry that doesn't.
Right. And hey, almost every single person got it right. Love to see that. And again, we still
Yes,
have a close race here for top three. I love it. I love to see that. It's not like someone
top
just
three.
gets every single thing right and
Bread
it's one
Boys,
person winning it.
yeah, and Bread Boys just shy. I mean, Blazing has a chance too if his AI was quicker, maybe. I don't know.
Question 13. A company repurchases shares. Which of the following is true when they repurchase shares or share buyback? What does that mean? Who knows? Well, I do. I know Ryan probably does too. I'm guessing Ryan, you probably know this, right?
Uh, I I did after I read the answer. I didn't really I didn't look too closely. Go ahead though.
Yeah, so when you're doing when they're rebuying their shares, they're taking shares off of the secondary market for other people to buy because they're buying it for their own company and for their own worth, basically. So outstanding shares do not increase. This definitely does not happen. That would be if you have a stock split where you have more shares that are going to be on the market, and buying them back actually takes away how many shares you actually have that it can be available to other people. Because if the company owns their own shares, they're not publicly available for people to trade back and forth, right? So it actually decreases the number of outstanding shares, not increasing it. Now, when you decrease how many shares you have, your earnings per share will increase as a result because there's less shares. But if your earnings are still very, very strong, as you do the calculations behind it, it actually is going to increase, or it may increase your earnings per share. Cash increases. That's not true. You're buying your shares, so you're not making more money. You're spending more money to get your shares back. So you're not actually increasing your cash, and your debt doesn't automatically increase. Okay, you could be using the cash you have available, or you could be using debt to repurchase shares. Obviously, it's not automatically going to increase because if I use cash, like Nvidia has done a lot of cash, if Nvidia has a lot of cash available, they buy back their own shares. They're not increasing their debt. They're using the cash they have available to buy back into their own shares. So the earnings per share may increase. Obviously, if the company sucks, it may not. But since you have less shares on the secondary market for people to buy, it will increase your earnings per share based on calculations, even if nothing else changes in their earnings.
Makes
Hopefully that
sense.
makes sense. And a lot of people got it right, so absolutely amazing. Love to see that one. We are still looking at a pretty close race here, which is awesome to see. Question 14, which is a leading economic indicator? Now, I'm sure Ryan saw this, was like, Fridge, same question? No, which is a leading one? You can already get rid of one of the answers. And if you pick an answer that you already know that's a lagging one,
Yeah, don't pick
we
the
may have some
lagging one.
fighting words. If you pick the lagging one, I don't know where you've been the last 10 minutes of this show.
Yeah, not paying attention. Oh,
Oh my
someone
god,
did.
dude.
2 people
Oh
did.
my god, dude. Guys, we just talked about like for 5 minutes about why CPI is a lagging indicator. Why would it
Yes.
be a leading one? That makes no sense. Oh, my head. My
Isn't
head, my head, my head.
ER?
Is it earnings? No, earnings is not that. And the reason why is because earnings are announced quarterly from their previous quarters, right? Your earnings that come out, your corporate profits, your earnings come out as previous quarter data. It's not the current up to date numbers that we're looking at here. So sorry for it's okay. I gave you guys the hint also, and I'm pretty sure Ryan, I said 10 minutes ago, unemployment is also a lagging indicator.
I don't know if
But
I don't know if I said about unemployment or not.
I think I said that though.
Oh,
I'm pretty
yes.
sure I said, "Hey guys, we unemployment in the labor market is a lagging indicator, so we do revisions a lot for that reason." Your ISM PMI, big acronym, and you're probably thinking like, Fridge, what in God's green earth is that? Okay. Basically, what it is it focuses on it's called the ISM Purchasing Managers Index. Okay. And it's a leading indicator because it predicts future trends based on the manufacturing. And that's what makes it predicts the trends of what we're looking at. If this number comes in over 50, it means that our manufacturing is expanding and we can predict the future that there's an expansion in the manufacturing data. If it's under 50, then it's contracting, which means it could be bad for our future manufacturing numbers as well. So the 50 is the magic number. If it's bigger than 50, we are predicting an expansion in manufacturing, and it's below 50, we're predicting it to be a slowing down of manufacturing, which is a huge important thing to keep in mind about. So is this how Fridge students feel to be put down for not knowing one? Yes, Rock, 100%. I
Yeah.
just, I mean, hey, I'm used to this point. I just really thought you guys knew better, but it's okay.
Yes.
There's a vid going around of high school students complaining about having to do 5 sentences homework. Is it really that bad? Dude, Atai, let me give you an example, okay? There was a homework I gave out probably a couple weeks ago, and it was 6 questions, and they had a 4 day weekend because they were off from school on like they had like 2 days off, and they were complaining about 6 questions, and I was like, guys, can we do the math here? You could do 1.5 questions per day, and you'd still get it all done. And they complain about it. So,
I
yes, it
mean,
is that bad.
I will say AP though. I had the most homework in my AP classes, so I could understand if people are a little tired of homework in your AP class, but I don't know. Could be different.
No, my AP, my AP, I loaded up. I loaded up like a loaded deck of cards, dude. I'm loading up everything. Like I'm just like, yep, here's this, here's this, here's this, here's this. I'll see you guys in the next class, and
There you
they don't
go.
care. They're like, all right, cool. The the first day of school was really funny, actually, Ryan. The first day of school, my AP kids walk in, and I'm like, I bet you want to know who I am. And I was like, if you stay in this class long enough, you'll figure out who I am. Other than that, I don't care if you know who I am or not. I'm gonna start teaching you guys already. And they're all looking at me like I was nuts.
Well, there you go. It's AP. You got a short amount of time, man.
Yeah, so I was like, "You really want to know who I am? Stay in the class and find out. You really don't care? Okay, I'm gonna scare you out really quick." So,
Yes. There you go.
yeah, love to see that. And I scared out, I think, like 6 kids. I think got scared off after that first day. So,
There you go. Hey, at least they got out if
right,
they
Strat
wanted
Cat
out.
taking over first place. Has Strat Cat won before?
Strat has one like 3 or so weeks ago, I want to say. If that's right, Glenn, I can't remember
Ooh, his
exactly, but
his 3 month may be up then, and now he's got another month coming, maybe.
well, he picked uh, mentorship, coaching. So,
Oh.
yes, he has
That's
done.
why, and that's why he's in first place again. It's the mentorship. The mentorship he gets done.
eh,
Look who's in first place again.
he only used one of five, so he's still got a lot to go. Right, right.
Question 15. What is the gap between the return on government bonds and the return on corporate bonds called? I
Yes.
actually know this
So
one, I think.
we discussed some of these last week for anyone that was here, and it's okay if you don't remember. But yes, um, I mean, the one thing is that it's the one that I haven't talked about yet, but you'd have to have been here for the past couple weeks. So, yes, the answer is the high yield spread. The equity risk premium, as we discussed last week, is the difference between the risk free rate and the return on the stock market. I can't remember exactly what it said, but high yield spread is the difference between corporate bonds and government bonds because government bonds are quote unquote safer than corporate bonds. So that's considered the high yield spread.
Yeah, and if
Uh,
you think about it, also with corporate bonds have more risk, so they probably give you a better yield as well. So it makes sense that it's the high yield spread. It would make a lot of sense.
yes, that is also true. And I didn't mean to confuse you there, Tyler. Sorry, I was hoping to give hints, not opposite of hints.
Did you get it right?
Oh, you got it right. Never mind. I helped you. That's good though.
Ryan's out here cheating, dude. Unbelievable.
I wasn't cheating. I was just giving hints. Like, but you'd have to have been here for the last 2 weeks to know.
It's like when a tie says like, "Oh, that's a teacher response. I'm not gonna pick that one" or something like that, like some stupid crap like that. Trying to read into it instead of just knowing the information. Just know the knowledge. Just get the knowledge, dude. Okay, stop
Yes.
trying to read into it.
Well, I mean, some of these, like that high yield spread, I watched a YouTube video recently and got that. But that's stuff that I didn't know. But I think it's good to know. Some of these questions aren't necessarily going to know. It's just a learning opportunity. I think, um, in my opinion, and the
So
same with your
Rochester have to
question.
use a bathroom. Are we are we obliging to that, or we never had this before?
Yeah. Well, Rock, how long are you going to take there? If it's a 2 second thing, go ahead. If it's a 5 minute thing, sorry.
Yeah, you're out, dude.
Yeah.
Or just bring your phone with you. Come on.
Yeah. We can't see then. I'm done.
Oh, he's
Okay.
done.
We can go to the next.
Ew. I bet he went at 7:05 and he's done at 7:06. This yeah, this dude actually probably was like just already in the bathroom.
Yeah, he was typing while he was peeing.
Question 16. Which of these is not a bear strategy? Someone Ty said wash your hands. Yeah, he probably didn't wash his hands
Do wash your hands.
either.
Not a bearish strategy, not being
Not
the key
not
word here.
not. And guys, remember how we got the CPI question wrong last time? Like, I need you guys to lock in for this one, okay?
Some people might not know. It's
That was
okay.
embarrassing.
So, yes, the answer is iron condor because an iron condor, technically, traditionally, if you set it up correctly, is going to be a neutral strategy. It can be skewed to be bullish. It can be skewed to be a little more bearish too. But if you think of it in technical, like typical, it is a neutral strategy. Put debit spread, you are hoping for the stock to go down. And so you are buying a call that's either in the money or at the money and selling, or excuse me, a put, excuse me, buying a put that is at the money or in the money and selling a at the money, out the money put against it because you're hoping for the directional down. Call credit spread. You're selling a call that is at the money or something, or maybe in the money, and buying a a call to limit your risk, and you're hoping for the stock to go down. Put diagonal. No one guessed it, but you're hoping for the stock to go down with a put diagonal as well. So, hoping
Love
for it to
that.
be a little bit easier one, but with spreads, I know a lot of us don't know spreads, so it's okay. Once again, learning opportunities.
We got a takeover in first place. I don't know who this is. Who is this? Anybody?
That is Itai.
I'm not saying the name out loud. Oh, okay. I'm not saying the name out loud.
I don't. I'm trying to read it in my head, and I cannot. I don't get that one. I get the other one that was up there, but I don't want to say it aloud. Don't want to misstep, but I cannot. I have no idea what's funny
Yeah,
about that one.
I know what it is. Question number 17. What is the Fed's dual mandate? Do you know what Jay Powell, Daddy Powell does? Do you know what the focus of the Fed is? There's two things they focus on. And if you're following the economy, you should know for the US at least. What's dual mandate? Who said pancakes and waffles? You got it. Your mom. Nope. That's not my mom. Yes, as you guys might hopefully have guessed, they do focus on two things in the economy. It's the inflation and also the labor market. And right now, the Fed is in quite a tricky situation because inflation is going higher or starting to show that it's still going higher than the higher 2% that they want. And the jobs market is also falling. So they're facing this kind of sticky situation like pancakes and waffles with syrup, right? Sticky situation here where it's either we cut rates to try to boost the job market, but that's going to push inflation higher, or we don't cut rates to kind of combat inflation, but that's also going to have a risk to the labor market going down. So we don't really know what's going to go down. So that's a dual mandate, though. They try to focus on having a good labor market and low inflation is the key thing they're looking for. It's called a dual mandate. You guys all got it right because you're all super awesome.
Yes.
Question number 18. If a company has a debt to equity ratio of 2 and the total equity is 50 million, what is its total debt? Can somebody do math here?
A little quick
Let's
math.
find out.
Quick math. Not.
Debt to equity of 2, total equity is 50 mil. What is the total debt?
There's an equation there. Solve for x. There we go.
Right. And so you know what? I'm happy that we didn't get someone say 50 million and no one said 150,
Yes.
which is good at least.
Yes.
So
Someone
again,
just
since
got
it's
the
called debt to equity, yeah. So if it's debt to equity, your debt is the number divided by your equity, which is your bottom. And if the ratio is 2, if you divide it out here, basically it means your debt divided by your equity should give you 2. So if the equity is 50 million, that means your debt has to be 100 million. 100 million divided by 50 million gives you 2. And Rock says, I thought it was 1-to-2 ratio.
Oh, I get you.
Go back to
Well, you got to think
school.
about debt divided by equity, I think is the way you got to think about a rock there. So, 100 divided by
Yeah.
50 would be, you just messed up your denominator and numerator there. That's all.
Yeah. Hey, man. Maybe. Hey, if you win, I can do your homework for you. Okay. Don't
There
worry. I'll do your homework for you. All right. That's one of the things.
you go.
That's I got you covered. I'm the hardest. Yeah, I got you, dude. Don't worry. I'll AI my way through it. I'll make some crap up. I don't care. I'll figure out the numbers. It's all good.
Two more.
Two more, and it's a race for top two. And actually, you can still, people who are still behind can still get in some. We still got
Yeah.
anyone's game
Yeah.
here.
Yeah. Yeah.
Question 19. If you buy a stock on 10/23/25, what is the earliest you could sell it for it to be classified as long-term capital gains?
Or
Ooh,
loss.
good question.
Thank you. Thank you.
Or loss. Sorry, I didn't read that
This
one.
this one was actually yeah, wait a minute.
This one can be tricky. I can see why. I feel like I know
Yes.
what the answer is, but I feel like I can see why it can become tricky.
I was going from so everyone got it right, but I was thinking of it from a days perspective, like, oh, it's just 366 days, but it's not necessarily that because there's like
Yeah.
leap years and all of that. So it's only that you need to hold it a
Yeah.
day past a year of when you bought it. Because if you sold on 10/23, they still would classify that as short term. So yeah, it's that you need to hold it for a year, one day past a year, basically, in my mind, is what I would think of.
Yep.
So
That's the other one I was thinking of.
yeah, because
Love,
without looking
love
it up,
that.
I would have maybe guessed 10/23. But like I said, I was trying to go from a number of days standpoint, but I decided to change to a date format.
Yeah, no, I get you, man. And yeah, that's kind of, I was saying that like you have to be a day after the year because you hold it for only 1 year, then you're subject to the short term because a year is like your yearly income, right? Anything
Right.
after that is going to be your long term capital gains for sure. But it's a good question. That's why I said, ooh, I like this one.
Thank you. Thank you. Here goes
Strike
Etai.
didn't move up.
Nope. Stratcat. Wait. Oh, Stratcat might have not participated. Ran out of time.
Oh, ran out of time.
It was kind
Oh,
of a hard one for 20 seconds, to be fair.
yeah. Last question of Financial Trivia Week 9. In futures products, the tick size is standardized across all tickers. Oh, wow, dude. You made a true or false question.
Yeah, just true or false. I wanted to touch on this. It didn't seem easy to do multiple choice, so
I'm guessing Ty got it right.
I would think everyone's
I
going to
read
get
it
it
right.
right. Yes. So futures, this is what makes futures more confusing and makes them kind of a barrier is that nothing makes sense in futures. Every tick is different. Um, every symbol makes no sense. Like why is crude oil a CL? It should be CO or something. There's a lot that like silver is SI, lean hogs is HE, cows are LE. Things that don't make sense. But anyways, the tick size is not standardized, and what makes it, you got to look it up and figure out what you're doing. The one thing that is mostly standardized, which we talked about last week, was that the size of a mini compared to a micro is 1/10 the size of the larger product, and that's pretty standardized across most of the tickers, not all of them, but most of the products.
You know what? You said cows are LE. You know why? Because it's cattle and the LE for cattle. Got
Is
it.
what?
I don't know. The word cattle is CATTLE. What's the LE? It's for cattle
There
for
you
cows.
go.
I don't know.
Okay. No, hey, you might be onto something. But what about lean hogs at HE? What would you think on that one?
Lean hog. Well, they're just dyslexic for that one, I think, and they had it backwards. I don't know.
Oh, hog
Hog
equities.
equity.
Still, it makes no
But
sense.
where's
It's not standardized.
dude? Where's the L in the word in the two words?
Yeah.
That's like December is with the letter Z. We're still on it. We still remember.
Yes. But hog
I
equities,
saw somebody. I saw
ET.
somebody trade a futures, and I saw the Z. I said, "Dude, that's December." You know why? Because it's December. Like I knew it. I actually know
There you
the
go.
answer now.
There you go. See, you knew it from last week or 2 weeks ago. 2 weeks ago. Last week we did the year.
Yeah, I feel like we mention it every week though. Now we mentioned it for 3 weeks in a row.
It's true.
Thank you guys all for playing as we are finishing it
Yes.
up here. So on the podium in third place, we have Bread
Red
Boy.
Bull.
Congratulations on third place. Second place, Strat Cat, and in first place is
Etai
Itai. I'm
for a
guessing, and
third
I'm not saying the
time.
name.
I don't. I'm gonna have to after we stop recording. Someone's gonna have to read that spell. I don't. I'm. It's over my head. Let me be honest with you.
Yeah, I got you. So, for the YouTube side of things, everybody, thank you so much if you watched all these, and hopefully you learned something new. And again, if you do want to have access to these trivia's every Saturday evening, 6 p.m. Eastern time, you can always reach out to Ryan and get a free week on his WAP, and then you get access to these every single week. So,
Yes.
Ryan, anything else to say before we leave for the night?
No. I mean, obviously, you can also talk to Fridge and the info from me to Fridge. So however you want. But yeah, free week if you want to try it out. Just see what's up.
Yep, absolutely. So thank you guys so much for watching, and we'll see you guys back here next week.